Hello everyone, welcome to the Ichimoku daily analysis for the S&P 500 for Tuesday, June the 12th, 2012. Well, a change of trend today and a candle with a lower high and a lower low. But we have a white-bodied candle. So today we have a downtrend which isn't supported by the sellers. And the previous day we had a change of trend to the upside which wasn't supported by the buyers. So we're getting a lot of indecisiveness in this market. The market is congesting within these 4 bars, and a lot of days now where we have changes of trend to the upside, where the buyers lose commitment, and today a change of trend to the downside where the sellers have lost commitment. The buyers have taken control of this market throughout the day, closed up towards a high, made solid net bullish progress and a fairly large wide body candle. So quite a lot of indecisiveness and a bit of volatility in this small time frame here. In terms of resistance, the market has very strong resistance at this 1333 level, which I'll discuss in a minute. It could be a fairly important level, but also we have strong support down below around the 1300 level. So the market is actually caught between these two boundaries, and a very strong boundary down below the support level at 1300, extending down to about 1295 or 1290, and then down to these lows around 1277 and below. Now, the market appears to be forming a complex type of head and shoulders, a reversal pattern, an inverse head and shoulders. As with all patterns, we need the prior downtrend, and here we have the prior downtrend. Here we have what seems to be a left shoulder forming, but it's a complex one because we have 2 troughs within that left shoulder. Here we have the head, and we have the right shoulder that's forming, but we had the breakout above, or an attempted breakout above this area here, and it seems as though we're getting another, we had a trough here, and then perhaps another lower trough here. So in a similar way where we have these 2 troughs within the left shoulder, there is potential to have 2 troughs within the right shoulder. This makes it possible, if we do trade back up to this 1333 level and take at that level, it makes it possible to draw a potential neckline through these 2 peaks within the pattern. And what we're looking for is a close above that neckline, and a bullish close would be quite a solid sign that this pattern was going to potentially complete and have some chance of reaching its target. So there is a possibility of that happening, but that would be a complex pattern because of these 2 troughs that we've got here and the potential for 2 troughs within this area. Strictly speaking, if we limited to 1 trough, then we would have a trough here and a small left shoulder with a sloped neckline, but that sloped neckline was taken out for the previous day's trading without a close above there, and most of these patterns require a close beyond the boundaries of the pattern. So here this breach of this sloped neckline negated that pattern, but there is potential for another complex pattern to develop, so let's just bear that in mind. In terms of the Fibonacci extension for the uptrend that's just completed, and what we're comparing is that uptrend that the market began yesterday compared to the previous, and we saw rejection from just above the 38.2% level. So that made that a fairly important level and a good indication that there was going to be a change of trend to the downside with this candle where the sellers had control. So that 38.2% level is held pretty well. Just looking at the current Fibonacci extension, and what we're looking at now that the market is trending down, we're looking at one of these levels to hold as potential support for this market, and we're comparing the current downtrend to the prior time that the market was trending down, and we're looking at the ratios there. So the market has already taken out the 100% level. tested down to around the lows of the previous candle, just below there, and we have a level at 161.8%, which coincides exactly with the Tenkan Sen and makes that a very important level. It happens to be 1301, which is that roughly that round number 1300. So we know obviously that 1300 level is a very, very important level. So if we do see the sellers come back into this market, that's an area that we should see very strong support around that 1300 level. And as I've mentioned, the level does extend just beyond there, even down to 1290. In terms of Ichimoku, we have a market that's bearish in the long term and not quite in the medium term time frame. We're bearish in the long term by trading below the cloud, but we're pretty much neutral to just slightly bullish in the medium term time frame by trading above the Kijun Sen, the pink line. Now, just looking back here at the recent past, the market hasn't traded this close to or even above the Kijun Sen for quite some time, and the last time was at the end of April. So that could be significant that the market has tested to that level and closed just beyond. Technically it is a bullish signal, but it's only a weak signal because the market because that signal has occurred below the cloud. So a weak signal, but the market is trading a fair way away from the cloud. So it's not an extremely weak signal, and probably something that we should pay attention to because of the fact that it's the first time in quite some time that we've been trading even near the Kijun Sen. In terms of the Tenkan Sen, the market remains above the Tenkan Sen, so that's fairly significant that we've been trading above there for approximately a week, and it's been quite some time since we were trading above there for that period of time. So there is possibly potential for this market to develop to higher levels. Having said that, however, we do have strong resistance at this 1333 level and the possible neckline of a potential complex head and shoulders pattern, and that does suggest that there is a possibility that we could see completion of that pattern. So I think over the next few days trading will be very important with regard to this 1333 barrier, but also to the 1300 barrier. So let's watch the high and the low of the current candle for any potential change of trend to the upside or continuation of a trend to the downside.